Hello, everyone. So, it's your boy back again. Happy New Year. I believe this is my first video for the year. Um, so, I will analyze the two positions I took and the profit I made, the reasons for entering the trade, and the reasons for exiting the trade. So, it's going to be a quick analysis so we actually see what happened. Okay, now let's say this was where I started. I'm going to put the take profit and the stop loss later. So this, I noticed that the market is making a resistance at this point. If you watch carefully, you will notice that the market found it difficult to break out from here. So I took note of this, that okay, we're having strong resistance. Let me reduce the feel of this so we get to see. Okay, good. I think this is okay. So I noticed that we're having streams of sellers trying to push prices down. Now, at some point, the market broke out from all of these people with this candle here. So when it broke out, the market started buying up. But apart from this set of sellers here, there were also another group of sellers here. So also we need to take note of this major group of sellers here. Watch the way they pushed the prices really down to this point. But that notwithstanding, there were also another group of sellers here. Now, why did I take note of these people? Because the market did not give opportunity for entry around here. The market did not give opportunity for entry around here. I don't want to really go into this analysis, but if you check it, um, when the market actually reversed and turned back bullish, I based on my trading rules, I am not supposed to be trading at that time. So that's why I didn't consider this an entry point. And all through this market going up to this point, there was no way I could enter. So yeah, there was no reasonable way I could enter. Now, also, we should take note of the fact that there were sellers here. So this market flashing up, moving up, broke out from this group of traders. So it made their position invalid. Most of them set their stop losses here. So this alone is going to take it. As a matter of fact, those of them that entered here, when this market broke out from here, if you were to be in this trade, what are you going to do? You're actually going to remove the stop loss that you put here. That is a very reasonable action to take to protect your capital. You will take out the stop loss that you put here. In fact, from here, this market breaking this structure here, people already took profits for the trade they entered here. That is, if you know, you know though. Okay, so now this market pulled up, and guess what? It retraced back. Um, we could call this our indication, indicating that anything from above this box, the buyers have full charge and full control. Anything above this box, the buyers have full charge and full control. Anything below it, the sellers can really, mess around. So also from here, that shows that anything above this point, anything from here, from this point, I mark this white line, anything above here, the buyers have control. But also anything below this point, the sellers can as well do something very stupid. Okay, so what are you going to do? Now, here is the thing. Until this market comes down and break these people and break this group of buyers here, we are still bullish. We are still very much bullish. Structurally, until this market breaks below here, we are bullish. Yes, it might seem as if we are breaking structure. We broke these people. Yes, we broke structure, but that is not really the full picture. Now let's go over to the daily time frame. Let me show you what I mean. Okay, under the daily time frame, this market moved like this. We created this high. Now we came down without taking out these people, and now the market made a new indication. This indication shows that anything above here is now bullish. Even we took out these sellers here, showing that okay, if let's say you miss the trade here, you shouldn't miss out at this point. So okay, enough of the explanation. Now let me let me move into so I take this from here, I take this as my indication. Also above here, this could also categorize as my indication. Now what am I going to look at for? I'm going to look at for correction. So I'm going to wait till the market repeats a bullish pattern. Now this market flashed down, it pulled up a bit, we came down again. If you zoom into 1 hour, you're going to get a better picture, but I don't really want to be operating under a lower time frame because it really makes the market messy sometimes. So if you look at this structure that was building here, we pulled down here and then we pulled up. Now we pulled down, we made a new low, we pulled up, we made a lower low. But guess what happened? At this point, instead of us to pull up here and go down, the market made a high, showing that these sellers at this point, the sellers at this point have been taken out. We have to start looking at trading more of like the positions people are taking rather than a trade. That's why I captioned this to take a position, rather take a position, not a trade. Take a position so that you get balanced. So that was exactly what I did here. So when I noticed that, oops, where are we? Okay, when I noticed that this market, instead of maintaining this structure, even under 4 hours, it is clear. Short at any time frame, it is clear for you. Follow that. The market pulled and made this low. We made a lower high. Instead of us to go, yes, we made a lower low, but instead of us to make a lower high and then another lower low, which shows and which signals that the bearish trend is strong, guess what happened? The market pulled up and broke out from these sellers. Now, again, what it was doing here under a higher time frame, it has started repeating it under a lower time frame. Good. So what did I do? I took note of this point. Now I know in my head, Francis, anytime this market turns after this correction, if you should go into a lower time frame, you will notice that there was a major correction here. There was a major correction after we broke out. Now, immediately anything above here is bullish. So this was where I entered my first trade. I entered with this 12 p.m. candle here because this is when there is volume. And now, before I do enter with 11 p.m. because that 11 a.m. that is when the volume new London session / New York session. That is actually when the volume kicks in. But from now till March, it is going to be 12 p.m. because I think the London time is now an hour ahead of Nigerian time. So yeah, that's on the side. So whenever now I notice that okay, instead of this now, if we were also bearish, this correction would have taken out all these people that were buying here. So but it came down and started reversing back. So at this point I entered this trade. I entered here. Now I want you to notice what happened. I entered there and I put my stops at this point. This was where I put my stops. Wait, okay. This was the trade 1:4. No, it was over 1:4. Where did I enter? Oh, definitely not here. Definitely it's not going to be here because I'm sure I didn't take this trade at this point. No, it can't be. So I took this trade here, but I think my stop loss was a bit lower. My stop loss was very, very much lower. Okay. Yeah. I think it was here. Yes. My stop loss was at this point. I was risking really a lot. I was risking because I wanted that if this stop loss was to be taken, then I am wrong. I am wrong if the stop loss is taken. That was the whole idea. I told myself, Francis, if this stop loss get taken, then you know that you are wrong. You know that you are wrong. And this I am wrong only when this market, instead of making a lower high and the higher high, comes and makes a lower low and wipes out all these people. So that was the whole idea. And this is what I mean by taking a position. So I actually took a position. I took a position because if I took a trade, I would place my SL here. And guess what would have happened to me? This market would have come back and take this SL. And that is why you have to set your SL at the lowest point that initiated the breakout and not where the retest stopped. Yes, sometimes it works with where the retest starts, but it could be very tricky, just like this one that happened here. It will be very tricky in such a way that the market knows that a lot of people are here, and especially when the volume is not that too much, the market knows that a lot of people are here and it will take you out. So I placed my SL at this point. At this point, now watch where I placed my SL. At this point, I didn't want to place it at this lowest point. I placed it in such a way that if anything that makes the market to draw down to this point, it will surely take out everybody here. So no need wasting these extra pips. But I did it in such a way that no need wasting this extra. Let me calculate how many pips. No need wasting this extra 25 pips, 24 pips, sorry. But I know that anything that makes the market to come in around this point, if you watch, there are strong buyers here. So anything that makes the price to come below this point, it is going to take the person that puts his SL here. So that was why I just left it there. So my SL was somewhere around here, yeah. So, and I was targeting really, really up because I know that from experience, I know that all of this is my indication. All of this, all of this is my indication. All of it. Because if you look very carefully, the market indicated that anything above here is bullish. So in my mind, I'm thinking, okay, if anything, the market shows that whenever we are buying from here, we're going to give to these sellers at this point. So anywhere my take profit will be, it is going to be somewhere above here. Now I use what I call the keys to take my profit. So I know that once the market gets to this point, it is going to get to this keys. That's why you see this 3 months. This is a 3 month keys. It's another concept on its own. So now the market broke out, retraced back. I entered at this point. I set my SL where I know that if this market should take this SL, then Francis, you are wrong on the idea. Period. The SL is big, yes, but if it should be taken, then I am wrong on the idea. And that is the position I took. So I see it more now like a position rather than a trade. You take a position in such a way that if the market violates that your position, then you are wrong, and I accept the risk. I accept the loss. So this market came here. Look at two things happen, and also you need to also look out for two of these to happen. The market will fake out those who are buying to think that we are selling, and it will also fake out those who are selling to think that we are buying. Now, when we broke out from here, think what just think about what an amateur trader will be thinking of. He's going to be thinking that we are buying, man, and he's going to jump right onto this trade and try to take profit. Look at what the market did to it. The market will prove to that trader that we are wrong, that he's wrong, because now he doesn't even know where to place his stops now, and he doesn't know how far the market will move. That's also another thing. Now let's say somebody enters at this point, okay, with this breakout here. Now where are you going to set your stop loss? That is the question. Are you going to set it here, I'm just wondering where the person will set SL. So the summary of this whole thing is, um, the market took out those who thought we are buying, because as they are buying up, they will place their SL here. That is the idea. They put their stop loss here. The market came and took it, and the market also took out those who thought we were selling, because the average new trader would think that, since this market failed to buy from here and we are now around this point, that this market is going to sell down. Now the market also took the money of those who thought we were going to sell down, and then finally the original trend will now prevail. The original trend will now prevail. I mean, I was on this trade, and this trade moved my way, giving me 1:1, about 1:1 risk to reward, and then I am now in drawdown. I told myself, Francis, I'm not going to close, because I know I took a very good position, such a way that if this SL should finally be taken, I know that I am fully wrong, like super duper wrong. So now, fortunately for me, this market broke out. It broke out from this set of sellers at this point. I told myself, instead of me closing on this trade, I am going to load up even more. I'm going to load up even more. Instead of me to close out on this trade, I am going to load up even more. Now, the idea is this. Immediately, we entered into, now I know that anything above here, the market gave a new indication. Now, from here, something was broken, BVM, break of visible mode. We are supposed to be going down, but for some reason, which I don't know and I don't care to know, the market broke out from this group of sellers sitting here. This is an indication that anytime price is above here, we're going to buy to this point, and that indication was filled. Now, when also another thing is that whenever the indication is filled up, the market has a right to retrace back, because these sellers here have been taken out. So as the market is retracing back, those who didn't put a sell, a lot of action is happening here. So now the market gave a new indication. It gave a new indication that, see, instead of this point, anytime this market is above here, we are going to buy to this point. Also, after this have been taken out, the sellers will of course react. The market gave a new indication without breaking key structures. Without breaking this structure, the market gave a new indication. Now I know that from anything above here, especially when the market has reversed back to be bullish, we are going to get to this point. Now, if you zoom into a lower time frame, you will notice when the thing changed, and then you will notice the time when I entered too. And your entry point is very, very key. Your entry point is very, very key. Now, this market did this under 30 minutes. We moved on, we pulled back. Sure, this could be categorized as an equal low. We made a higher high. Now the market started breaking down, low, lower high, lower low, lower high, lower low. Now, if this market was to continue bearish, we shouldn't break this point. At this point, around 11, the market actually broke out from here. When it broke out from here, I knew that we are going to be bullish. So I entered. Now, mind you, this is now a second entry, and obviously we were in the section when there is volume. This is after 12. So I entered after this point, because I know that anything from here, the market has shown me that it can get to this point. So I entered here. Now I put my SL at this point. Yes, I was risking 60 something pips. I didn't want to risk much, because the idea was this. If this guy, let me put a higher time frame so it makes a little bit sense. So the idea is that if we can make a higher high above this level, I'm going to push this former SL, I'm going to push it to this point, because anything that will make the market to break out from this point, this SL here is gone. So that was just the idea, and as God will have it, it really worked out. So this was my first take profit. So I took the first profit here and I closed out on this trade. So this trade was around 1:3.4, which is almost 1:3.5. So I closed out on this, two trades at a go. Now when the market kissed this point, I took out this trade as well. So in total I made about, this is 218 pips. Just watch what I made from this trade. I made 218 pips. From this one alone, I made 343 pips. Now let's do the maths. Let's calculate. Where is my calculator? Sorry. Oh, where is it? Where is it? Where is it? A minute, please. Okay. So in the first one, we made a profit of 343 pips. 343 plus. In the second trade, we made 218 pips plus 218. That is giving us 561 pips. 561 pips. This is massive. Now, if this is the only trade I take this month, so be it. So be it. So be it. I mean, the market pumped higher, like from when I took my second take profit at this point. If you can see, the market moved extra, um, extra 300 and something pips. Yes, it moved extra 300 pips, but I don't care. I don't care because you cannot catch everything from the market. You can't just catch everything from the market. And at this point, it start getting risky. And now watch these my cases. Watch what happened here. When the first thing, when immediately we got to the, let me remove this so you see clearly. Immediately we got to this point, look at the market retrace back, showing that this 3 months case was very, very powerful. Also, immediately we got to the final take profit, look at what happened. The market also retraced back, showing that there is very, very something strong with these cases I always mark out. Now, this market moved on. I mean, this is a rare case. I didn't expect it to really move on. That means something must be driving the prices. But there could also be a case whereby this market will just turn down from here, and then I will lose all the money I've already made. So yeah, so that's why it's not good to be greedy. So no matter whatever thing is happening now, I've trained myself not to worry about this. Yes, you will feel like, I should have been in this trade, but that's not always the case. Sometimes you just let it fly, okay? Because this thing that happened here could lead to this market turning back. Because notice that at this point already, around here, the sellers who were selling here have all been taken out. They have all been taken out. So the possibility of this guy turning, creating a low is very, very high. It might not create a low to this point, but the possibility of it coming, really down, you don't know the extent at which it will go down. That possibility is there. So yeah, this was it for this month. I mean, I don't think I will be able to get another trade this month, but yeah, so be it. So be it. I mean, I am satisfied with the results of this month, and I pray it continues. So, but I'm not thinking from what I'm seeing now. Like I said in my last video, I post videos when I can. Now, I am not a social media influencer. So this channel is basically for me to journal my trades, and if my viewers find it insightful, they can save it and rewatch it and all of that. So I am not posting for the sake of maybe getting a lot of subscribers, and if that comes along, fine. But I don't want it to be like I am. I know since last year, early December or November, this is the next video I'm posting here. But if you also look at the chart, you will notice that the chart has been really choppy. Okay, I'm not saying money couldn't be made. Money can't be made along this time, but I now take my time to enter positions. If you watch, These two trades I took, I positioned myself to leverage most of what is happening now. And it really feels good to do that, especially when you see how the impatient traders are being manipulated by the market and how they are being taken out and all of that, and you just sit and watch the profits flow in. It's very very good than you jumping into. It's better I take one or two trades in a month than to take 20 trades and lose 19. It's better I take one trade and it be profitable, or I know I did the right thing, even if it's not profitable, I know I did the right thing, than for me to take 20 trades and then lose 19. That is just it. Because if or to take 10 trades and lose 9. Because if you take 10 trades, let's say you are risking 10,000 naira and you take 10 trades, the probability is 50-50. Okay, if you lose 9 trades, you have lost 90,000. Now, the chances of that one remaining trade giving you about 10%, about 90% of your accounts, if you understand the mathematics I'm doing, is very, very slim. So it's better well, yeah, everybody has their style. It's very, very subjective. Trading is a very subjective thing, although you have to follow um, the natural law. But as also, it is very, very subjective. Nobody is wrong, nobody is right. It takes just one person to make you wrong. It takes one trader somewhere to make you wrong. When that trader enters a position that is against yours and enough people see reasons to join him, bro, you are wrong. You are wrong. That SL will just hit. Yeah, so I want to take a more patient step. So yeah, I'll keep updating when I can and when I deem it fit. Yeah, happy new year once again, and let's keep growing. I'm IFS. Peace out.